Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns on Nifty, Bank Nifty as well as on the different asset classes. Now first of all, let us discuss what market has behaved in the last week, and then we will discuss how the charts are panning out and what could be the trend for the next week. Last week market, or not only the last week but last couple of weeks, the market has been moving in a broad range. The trend is not clear. It has been consolidating in a congestion range where 18,300 on the upside is the major cap, and on the downside 17,700 is the major support area. So market is hovering between this range and it is waiting for a breakout on the either side. Now we are next week we are going into a monthly expiry, and then after that on 1st February we are markets are India markets are expecting what could be the outcome of the union budget on 1st January or 1st February. So maybe because of that, in an expectation, market is consolidating at these levels. But as we have been discussing since last couple of months, that the primary trend of the market is positive and is still in positive trend. The only thing is that currently it is into a consolidation phase, and once it breaks above or closes above 18,300, then we will see a trended rally towards again the upside trajectory of the markets from the current levels. So as of now at current levels, we feel that still maybe some sort of consolidation could be there, and we might see a breakout on the upside in the later part of the maybe 1 or 2 weeks. So now let us go to the daily charts of the Nifty, and then we'll try to figure out what could be the trend for the next week. Let us go to the Nifty daily charts. Now this is the Nifty daily charts. You can here clearly see that your Nifty has been moving into a particular range. You can clearly see. Now let me just stretch the chart so that we will have a clear view. As I said, look at here, 18,277. So most probably 18,300 is the major resistance. On the downside, as I said, 17,700. Here the base support area is just almost around 17,764. So this is the congestion range of the market until and unless we don't see a breakout on the either side, either above 18,300 or 17,000, below 17,700, market will remain in this congestion range, and it could be very difficult for the traders, to trade in such kind of market. Now let us go to the weekly charts. So here in the weekly charts you can see 1, 2, 3, 4, 5. Since last 5 week market has been stuck in this particular range. So you might be just knowing that last 1 month has been a very struggling period for traders also, but it has been a trading heaven for the calls and put writers, because market has been moving in this particular range. So market needs a breakout on the decisively on the either side. But now looking at this particular long positive trend, you can see this is the positive trend, and still market are bullish. At lower levels we are finding support at every dips. On Friday we have seen that Nifty ended on a negative note. Maybe some sort of cool off cannot be ruled out, but again, as I said, until and unless Nifty trades in this particular range, the strategy should be buy near support and sell near resistance area. The day it closes above or below this congestion range, which is 18,300 on the upside and 17,700 on the downside, then only one should take a directional call. But looking at the primary trend, we feel that we will see an upside breakout. So we are expecting Nifty to break 18,300 maybe in next 10 to 15 trading sessions, or maybe sooner than that also. That we will see in the next video, or during the markets hour in the next week. As of now, looking at this particular pattern, we feel that buy on dips should be the strategy for the next week. Now friends, let us go to the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 17,888. Below that, second support is placed around 17,761 and third support is placed around 17,576. On the upside, the first resistance is around 18,145, second resistance is around 18,265 and third resistance is around 18,473. These are the important supports and resistance level, and as I said, what traders should trade buy near supports and sell near resistance area. So one should just follow these levels and try to trade in this congestion range. And buy on supports and sell on resistance should be the strategy. The day it breaks out on the either side, one should start building a positional call, either on the long side or on the short side. But as I said, we are bullish on the markets and we are expecting Nifty to break 18,300 on the upside sooner or later. So friends, let us go to the option analysis. In option analysis, we'll try to study, the data, the derivative data of Nifty options, calls and puts. Then you will see on the screen Nifty call open interest data. Now here you can clearly see that the action was seen in 18,000 calls, then 18,100, 18,200, 18,300 calls, as well as 18,400 calls. Now here you can see there has been rise in the calls, open interest. There has been a rise in the volumes. Implied volatility is low. It is between 10.94 to 11.37. So low implied volatility seems that there has been the undertone is still bullish. But as we have seen that on Friday, some sort of selling was seen. So maybe you can see from here that 18,100 there has been a concentration of volumes and concentration of rise in the open interest is clearly indicating that 18,100 could act as a major resistance on immediate basis. Once Nifty breaks 18,100, then we will see a decisive rally towards the level of 18,300. And 18,300 is the level where we are looking out for a breakout of this particular congestion range. So looking at this particular data, we don't think any more or significant downside is there. Yes, some sort of cool off cannot be ruled out, but that cool off should be used as a buying opportunity. Now let us friends go to the Nifty put data. In Nifty puts, the action was seen in 17,900 puts, then 17,800 puts, 17,700 puts, and 17,500 puts. Now here also you can see there has been a rise in the volumes, rise in the open interest. Implied volatility is between you can say 11.53 to 14.32. It is still into a comfort zone. There has been a minor drop in the option premium. Maybe that is because of the monthly expiry. Now here looking at this particular data and particular volume, we feel that on the downside, immediate basis, we feel that 17,900 could act as a major support, and then below that 17,800. So we don't think that Nifty will break 17,800 on the downside. If there is any correction of 100 points, 125 points in Nifty from these levels, that should be used as a buying opportunity at the lower levels. So most probably looking at the charts of Nifty and the option data or derivative data of Nifty calls and puts, we again have a view that buy on dips should be the strategy, buy on supports and sell on resistance should be the strategy. Now friends, let us go to the Bank Nifty charts. On Bank Nifty daily charts, you will see that similar kind of pattern has been seen. It is congestion. Now in Bank Nifty also you can see Bank Nifty has also been stuck into a particular range since last two to three trading weeks. Now here you can see Bank Nifty has been stuck in the range of 42,800 on the upside and on the downside 41,700. So this particular 1,000 points range or 1,100 point of range, Bank Nifty has been stuck and it is on a verge of a breakout, and we feel that the breakout might come on the upside from the particular levels. Now you can see RSI is also very flat, but it is with a positive side. So which is clearly indicating that we are not seeing any major downside in Bank Nifty from these levels. Yes, some sort of cool off cannot be ruled out. Some sort of cool off, maybe 200, 250 points cool off should be used as a buying opportunity in Bank Nifty. So now friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed around 42,234. Below that, the second support is around 41,861 and third support is around 41,569. On the upside, the first resistance is around 42,716. Above that, second resistance is around 43,137 and above that, the third resistance is around 43,578. So these are the important supports and resistance level in Bank Nifty for the next week. Traders should try to just watch out these levels and try to trade in the direction of the primary trend of the week. So friends, now let us discuss the Bank Nifty derivatives data. You have seen you will see on the screen that in Bank Nifty call data, the action was seen in 42,700 calls, then 43,000 calls, and 43,400 and 43,500 calls. Now here also you can see there has been a rise in the volumes, rise in the open interest. There has been a flat closing in the percentage change in the option premium. Implied volatility is also into a comfort zone between 12.43 to 12.73. Now looking at this particular data, we feel that on the upside, major resistance would be around 42,700. If it breaks, then 43,000 would be the second resistance, and above that 43,500. So most probably the main trend descending level will be 42,700. Once it breaks those levels, then Bank Nifty might rally towards the level of 43,000 to 43,200 also. Now again, as I said, next week is a monthly expiry, so we will expect a huge volatility coming into the markets because of the rolling over of the positions from the current series, that means from January series to February series, and that will bring in a huge volatility into the markets. So from looking at this Bank Nifty call data, we feel that 42,700 could be the level. Above that, one should start create long positions or wait for some cool off, maybe 200 points cool off, then only buy at the lower levels. So now let us discuss Bank Nifty put data. In Bank Nifty put, the action was seen in 42,400 puts, then 42,000 puts, then 41,500 puts. Now here also you can see the action. In this particular action, there was rise in the volumes, rise in the open interest. Implied volatility is slightly rising from between 14.28 to 16.33. There has been a drop in the option premium. Drop in the Bank Nifty put is clearly indicating that the smart money might have started writing Bank Nifty out of the money puts, which could be an indication that we might see a rally on the upside from the current levels. If in case there is a cool off, that cool off should be used as a buying opportunity at the lower levels. And as I said, from the current levels, 42,400 could act as a major support. Looking at to the open interest and volume data, if it breaks, then only we might see a Bank Nifty drifting towards a level of 42,000. But as of now, as I said, any 200 point correction should be used as a buying opportunity in Bank Nifty also. So looking at this option data of Bank Nifty also, we feel that buy on dips should be the strategy for the next week. Next week is the monthly expiry, so we are expecting a huge volatility into the markets throughout the week. And after that, we are having a union budget, so market might be poised for a directional breakout if Nifty crosses and closes above 18,300 in the coming days, 10 to 15 trading sessions. Now friends, let us come to the last segment of our show, which is positional call. I have identified one stock from the defense sector. The name of the stock is Hindustan Aeronautics. The stock has been corrected significantly from the levels of 2800, and currently it is quoting around 2500. Now during this downfall, it has you can see that it is some sort of triangle. It is not an exact textbook pattern of triangle formation, but yes, you might consider it. This is a resistance trend line. Now this is the triple bottom. You can see, the low of this particular hammer candle, doji candle is 2422. Then again, this candle, green candle, the low is 2415, and low of this particular candle, or sorry, low of this red candle is 2224. So almost we can consider this as a triple bottom. It is not exact triple bottom, but we can consider it as a triple bottom because three times it has taken support and it has bounced back. Now if we take this as a triangular pattern or triple bottom, you can see the bottom are flat. RSI is showing a positive divergence from these levels. So the stock is very well poised for an upside rally from the current levels. Long-term investors as well as positional investors, positional traders can buy this stock in the range of 2510. The current market price is 2510 and got dips to 2480 for an upside target of 2811. 2811, which is the lifetime high of the stock. Why I am saying the lifetime, it could break its lifetime high in the long run, because we are expecting something good coming into the budget in the defense sector, and that would propel the stock from the current levels on the upside, and stock has potential to test its lifetime high. So long-term investors or positional investors can buy the stock in the range of 2510 and on corrections to 2480 for an upside target of 2811 for the long term. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week.